Hello guys again. This is the second recording of the day, Friday, and we just had the non-farm payrolls they have been released in something like 3/4 of an hour ago, and they were coming way better than expectations, so way better than expected, and it is a nice rally for the US dollar basically all over the board. As you can see, the euro dollar is 128.25.26 now. US dollar Swiss franc 96.32, so breaking the 96 level. 148.90, and it was well below that level cable. And of course, the US dollar Japanese yen was broken, was flying over the 101 level, and pretty much nothing to say based on this report. It remains to be seen how the US dollar will treat this move, starting with next week, and moving forward. Now the US equities are going to open in something like 15 minutes. However, I would not get involved into this choppiness, let's say, and because of the majors basically swinging all over the place, I am more likely to look at the Australian dollar, Canadian dollar, and this is the analysis that I want to make it with you today. As a second analysis, the first analysis this morning was based on the euro, Great Britain pound building a bullish momentum, and it is well over 0.86 now, so that one really was a nice one. But I would like to come back to this Australian dollar, Canadian dollar inverse head and shoulder scenario that we've treated the other days, and I would like to go on an even lower time frame. So let's click File, New Chart. Let's click on the Australian dollar, Canadian dollar here, and let's make it a template here, the 1 hour chart template. And basically this is the Australian dollar, Canadian dollar 1 hour chart. Now based on that inverse and then shoulder scenario, I would say that this would be the neckline that I'm looking at, something like this, the blue one. And what I would like to take into consideration is this gap here. You see this gap here. This gap is being called a window in Japanese terms, and this is being a continuation pattern. As you can see, after this window, when this window has been opened, basically we did make a new low and a new low. However, whenever you have such a gap or a window in terms of as Japanese are calling it, the upper and the lower part of the window are becoming important support and resistance area, and this is being basically a falling window support and resistance line. So look at what price will do around these lines, because they are extremely important in terms of support and resistance. So the first one here and this one as well. Now in terms of Elliott waves, if you take into consideration the fact these three higher lows, if I may say so, this indicates that the whole correction here is the whole move here is a corrective one, and normally this would be a third wave of a higher degree, and this should be the end of the fourth wave. And why only here? Because this looks like a contracting triangle, and this contracting triangle looks like this. You might say, well, this is not a contracting triangle, because the D wave that you're seeing here actually is longer than the C wave. Well, this is possible in a running variation of a contracting triangle, so this is being called, this is our contracting triangle, like this, and this is being called a running variation. running variation of a contracting triangle, and then this implies this is a complex form of correction of a lower degree. This will be wave A, and B, and C. So A, B, C, X, and then this will be the triangle with A, B, C, D. So with the D wave being longer than wave C, this is typical on a running variation, D, and then the E wave to the upside, and from that moment on we are having the beginning of a new move to the downside, and this would be basically wave 1, so the first wave to the downside, a second wave here in the form of a wedge, of a rising wedge. We all know that rising wedges are falling, so this is the wedge, so rising wedges are falling, and this one indeed it has fallen to the third wave here, a nice correction for the fourth wave, to the third wave, a nice correction for the fourth wave, and then moving into the fifth wave here. So 1, 2, 3, 4, 5, 5 waves down for the fifth wave of this degree, and more likely a fifth wave of a higher degree. Okay, let me make it a little bit smaller. So 5, 5, this to be a 5 of a higher degree, and basically I'm looking for this to be the end of the first wave of an even higher degree. So 5 waves to the downside ended here. It bodes well also with a bottoming in the Australian dollar, US dollar from my point of view, and then we have a nice ABC out of this structure. So this to be A, B, and C. This will be only wave A out of this degree. And normally this would be the B wave here. And now what do you know? We are looking for a C wave to the upside, and if this is the inverse head and shoulder that we're looking for, that starts from here with the first shoulder here and ends here, okay? And with the right shoulder that starts from here and ends at the measured move. Let's measure the move, and this will be the measured move. And you put the measure move here, like this. So basically we might consider that it is almost done. Now if you look at the amplitude, of the moves, this is the move that the dip that price did to the downside, and you project it here, you have almost the same amplitude for the right shoulder, and normally that would make the measured move for the inverse head and shoulder to be this one. So the target for a move to the upside should be around parity. So 99.81, 99 something, so it should be around parity, and this should be the C wave, and normally this should be the C wave and the second wave. Now this would mean parity, and if you take into consideration the support and resistance line given by the folding window, then take a look how price reacted around these levels. All the way through this area, and now it is finding itself again. So it was here, then here, and now again, oops, not like this, so it should be here, and now again we are in the same support area. Now from my point of view, providing these lows in the B-weight hold, I will look for parity, and that would be my target for the Australian dollar Canadian dollar cross. Now this is a 1 hour chart, so you should treat it accordingly, but nevertheless this is a nice setup for a possible ABC to the upside. Until next time, stay safe on the markets. Bye bye.